Aloha and welcome to Java. Thank you for joining me. This is for the week of Sunday, February 11th, 2024. It is Super Bowl Sunday in the United States. They will be having the major football game down in Las Vegas, Nevada. So that is why I have a picture of the ultimate cheerleader and football player couple up here. It is Valentine's Day this coming week. So, more than that, this is a major financial occurrence. So, this year, it'll cost $7 million for a company to have a 30-second ad spot during this event. As of Friday, the least expensive ticket was $6,944, and this is actually down from last week, $8,200, but the average is over $10,000 per ticket for this event. So this is major boost, at least for the local economy down there. We'll see if it moves the GDP or the inflation numbers coming in. So this is something, it's just going to be quite something for the local economy there at the very least. So going into our markets, we've got the MMRI, our favorite risk indicator, has been relatively stable. The markets have been going up at a steady increase. So we're still watching the dragon, which is China, and they've been managing their deflation quite well, actually. So we're watching our inflation data ahead. We've got CPI and PPI numbers coming this week, quite a full week, and we'll keep an eye on those yields. So this is the earnings calendar for this week. Got quite a few big ones on here. We'll be watching Cisco. We'll talk about them in a moment on Wednesday. We've also got Instacart. We've got John Deere, which is kind of a bit of an indicator for basically farming, small-based farming. Coinbase we'll be watching, and Shopify. So sentiment, we've got a few things that have happened. On Friday, the S&P 500 reached a milestone, closed above the 5,000 level for the first time, hit all-time highs, even though it came back a bit toward the end of the day. So we've got record highs for all of the indices again. However, these are all milestones. So where they go from here, if they retrace, a lot of the sentiment is that they do need a bit of a pullback. So we'll see what happens. We've got the BLS reported the updates to the CPI showed 0.2% increase in broad range, basically inflation. And this is lower than what they initially reported, 0.3. So since inflation is even lower than what they reported, even though it's still going up, just not as quickly, then they're talking about how the inflation progress that the Fed was making at the end of 2023, that maybe they can start those rate cuts even earlier. So I posture the other side. The Fed now has permission to cut rates, but they still don't have that motivation. And we were talking about that before. What would that look like? More job cuts. They have to be assured that all of that extra money, excess, is out of the markets, and that basically people can't just start spending right away, because that would increase the inflation on a very rapid pace, and that's what their concern is. They want it to continue to go up slowly so they can inflate over the long term, because that is their goal. So watching the calendar, these are the very important events. Starting Tuesday, the CPI. We've got crude on Wednesday in the spotlight. We're looking Thursday will be the initial jobless claims, as well as the manufacturing index and retail sales. So that will give an eye into the economy. Of course, we know these numbers will be basically skewed, but still they're an indicator. Friday, we've got the PPI, producer price index. That would give us a window into a slightly longer term, because they will pass that on to the consumer. So going a little bit more into the central banks, this slower inflation is set to fuel the Fed rate cut optimism, meaning that they expect this to kind of bolster the markets. So I don't think the Fed will cut yet, although the ECB is now talking about March projections will set the key for their rate path. And as I said yesterday, and to anybody new, the ECB must cut first, or at the very least, at the same time as the United States does. Otherwise, the euro will get decimated. The US dollar will become too strong and it will just lose out in the currency wars. So, ECB needs to start cutting interest rates soon. They're just kind of opening the window there so that the Fed can cut at the same time if that should happen. But their weakness is showing in their industrial sector and Germany. They're saying even it's come to a point where Germany's days as an industrial superpower are coming to an end. So they are in a recession. It's very clear they've been in one since October of last year, and they just are not calling it that. So back in the United States, this is globally, but they're talking about in the United States in specific that the great real estate crisis since 2008 is finally starting to hit the banks. Well, it's not just since 2008 this time, it's the commercial real estate sector. And so it is leveraged. They're talking about how it's not a bubble because it's not leveraged. But commercial real estate, the loans that they take go through pension funds and also the markets, much more so than the uh, residential housing market. So my argument is it is leveraged, it is in a bubble, and we're starting to see that effect. So with that, we've got Cisco planning restructuring and potential job cuts. They've already announced their job cuts, and they're talking about uh, focusing their shift to high growth sectors so that they can basically improve their bottom line. We talked about this before, is that this is how it would be packaged, that they're laying off. Another major tech company. We've got a long ways to go with the layoffs. There's more coming, more in March when that short term lending program stops. So I think that's going to be a major time to be looking at things, but we'll be here to keep you up on it. So we've got lender charge-offs and defaults. They're just beginning, but they're beginning to show the signs that they're increasing at a high rate. So lenders are tightening their standards, as we spoke about before. This is pushing people to their last resort since they cannot get loans anymore. They're going to the buy now, pay later, which don't vet people very well. So they really don't do credit reports or anything of that nature, very short term. But BNPLs, they have grown, they are now the size 30% of total credit card debt. That's a massive amount for such a short period of time. So this massive increase started by Walmart accepting and putting in BNPLs. It's not just groceries. However, this debt will come due. And what they're showing is that who is using these BNPL services are the youngest borrowers, Gen X, Gen Z. And these youngest borrowers, this demographic, they don't understand contractual obligations. They have not had to go through a recession. They're just too young. They're still relying on their mother and father. And we can see this with, they're talking about the Google search has increased for give back their car. So they're already defaulting on their loans, defaulting on their auto loans. And that's what we were talking about before with Tesla. I think that this is going to be a longer term thing. So they think they're sticking it to the boomers who they feel have put them in this situation, kind of rightfully so. But by doing this and defaulting on their debt, it's going the other way around because they're increasing inflation for themselves as they get a bit down the road. They will not have this hope to retire. They're protesting their student loans still. So they just feel like they can get these loans and then there's no coming due. They don't ever have to pay them back. So we'll see how this works out. So with Tesla, temporarily slashing their prices for some Model Y cars in the US. So my question with these auto loan defaults coming through, is it really temporary or how temporary is it? So we've got the surge in auto loan defaults triggering a credit crunch. So this is just that bank tightening of their standards increasing. So a couple of lava updates. We now have, with all the protests, the Dutch fishermen are joining the farmers. And they're feeling they're gathering a little bit of momentum. And so this is a positive thing with them because they feel like they're actually getting people to be aware of the globalist agenda for the environment, so to speak, and the falsehoods that it contains. So, one more story, and I know I've been bringing this up a lot, but more stories are beginning to come out. So please, even if it's minimal, filter your tap water. Reverse osmosis is the best. However, if you can't distill or at least filter something, because now they're saying there's a study that just came out about the forever chemicals linked to cancer, and this is in the tap water. So, with that, I want to wish you all a great rest of your weekend. Thank you kindly for being here and sharing a Sunday with me. And until I see you again, my friends, stay free.